Hi, my name is Jennifer, and I just want to say thank you so much to Wealth Guaranteed. I was, I had owed over $400,000 in taxes. I had won a jackpot in Las Vegas, in 21 for $1.2 million, and I was married at the time. My ex-husband, when we got divorced, he filed his taxes married separate, which left me with the whole tax burden. Um, I had gotten to a point where I had just buried my head in the sand and just had pretty much given up. I had tried so many different things and so many different ways to handle the situation, and a friend of mine referred me to these guys, and they had me taken care of within 48 hours and had this whole tax debt taken off my shoulders. And I cannot say thank you enough. I appreciate so much, and just thank you.
The following information in this presentation is for educational use only. It is provided to you with the understanding that the author is not engaged in rendering legal, financial, accounting, tax, or any other type of professional advice. All decisions made based on the material in this presentation is ultimately done at the discretion of the attendee. The author assumes no liability whatsoever. You're not allowed to copy, record, or use any of the information for any purpose whatsoever that is contained in this presentation without the express written authorization of Wealth Guaranteed. This presentation is copyrighted. If you do not agree to these terms, please leave this conference or webinar now. If you choose to remain viewing or attend this conference or webinar, your continued participation means that you're willfully consenting and agreeing to the above terms. Now, with that out of the way, we are Wealth Guaranteed. Today, we want to educate you guys on our two no tax pro strategies. Firstly, how to get onto the tax exemption list with our dissolution of default consent, and how to get 100% of your money refunded from the IRS with the 12411 process. You guys know where to find us, taxfreeforlife.org. Now, another disclaimer, here's what we will not cover, of course. How to hide or not declare taxable income. Needless to say, this will get you in trouble with the IRS. How to hunt for a lot of obscure tax deductions. You can be tax Harry Potter if you want to. That's not my thing. How to participate in tax evasion schemes. How to cook your books. How to violate federal, state, or local laws. Lastly, how to deceive, defraud, lie, or misrepresent yourself to the US government. If this is what you're into, you're not going to find it at Wealth Guaranteed. Well, we said this was educational, so let's get into the fact. Here's a small fact about the IRS that not everyone knows. Did you guys know that the IRS is not an agency of the federal government, and the federal government has stated so in open court? This fact was presented in the case Schultz versus the Internal Revenue Service, United States Court of Appeals. And they actually ruled that the IRS cannot apply force against a taxpayer without a court order either. Quoting from the above court decision, absent an effort to seek enforcement through a federal court, IRS summons apply no force to taxpayers, and no consequence whatever can befall a taxpayer who refuses, ignores, or otherwise does not comply with an IRS summons until that summons is backed up by a federal court order. A taxpayer cannot be held in contempt, arrested, detained, or otherwise punished for refusing to comply with the original IRS summons, no matter the taxpayer's reasons or lack of reasons for so refusing. Now that we're on to the facts, did you also know that every year over 80 million Americans don't file to pay their income tax? That's around 22% of the population, or 1 in every 5 people. Now we kind of have to stop and think, if it's really 1 in every 5 people, why aren't they all getting arrested? They can't all be criminals. Are they all criminals? Or do they just know something that most Americans don't? Something that they don't teach in school? Now, did you also know that 96% of Americans elected to become taxpayers voluntarily? Yes. And this election was made without your knowledge or by default consent the first time you filed an IRS Form 1040. There's no law passed by Congress that says anyone living in the 50 states has to do it. But if you ever did, you signed a contract. And signing this contract locked you into an obligation to file and pay income taxes every year. And this obligation, of course, lasts your entire lifetime until terminated. And of course, we always hear that paying taxes is mandatory for taxpayers. And the reason why we hear that so often is because it's true. If you've signed up, you've volunteered, elected to be treated as a taxpayer, you have taxpayer responsibilities. It's required for you. But what they don't seem to mention is that, yes, it's required for taxpayers, but being a taxpayer is voluntary. Only taxpayers pay taxes. Now, how do we know this? Well, let's simply check the Internal Revenue Code. Code of Federal Regulations, Title 26, also known as the Internal Revenue Code. Subsection 601, 602A. They call this paragraph tax return forms and instructions. So all the CPAs, the tax professionals out there, they've got to know this. Let's see what it says. The Internal Revenue Service develops forms and instructions that explain the requirements of the Internal Revenue Code and regulations. There's requirements and regulations here. The service distributes the forms and instructions to help taxpayers comply with the law. Once again, notice that word taxpayers. The third sentence is quite interesting because, yes, the taxpayers comply with the law. The tax system is based on voluntary compliance. And once again, the taxpayers complete and return the forms with payment of any tax owed. The IRS makes the forms. The forms are to be used by taxpayers and taxpayers alone. Now, we have to understand it wasn't always this way. Prior to 1913, America's economy thrived before an income tax was implemented, and everything worked fine. We were a world superpower. The real question is, what happened? Well, some of the world's most powerful and nefarious international bankers came together and hatched a grand plan to install a central bank in the United States. And with this, the Federal Reserve Act of 1913 was signed into law by former President Woodrow Wilson. Keep in mind, the Federal Reserve is a privately owned corporation, owned and run by some of the world's most powerful international banking families. They have no loyalty to America. And the name Federal Reserve is intentional. It's deception. It's deceptive. It's no more federal than Federal Express, or American than Bank of America, of course. And ever since these Federal Reserve bankers got the power to print currency at will, 96% of the value of the dollar has been destroyed. Your $100 bill, that's a $4 bill. This is where inflation comes from, the rising cost of living, of course, the wealth gap, real estate crisis, the recessions that always seem to never go away, they always come back. This is why. It's the Federal Reserve controlling, cutting rates whenever they feel like it for the purpose of making profits for their shareholders. So what does the Federal Reserve have to do with taxes? I'm not just trying to throw the blame on these guys for everything, but everything. And the reason why is because we can backtrack it. The IRS is the debt collection arm of the Federal Reserve. Keep in mind, the Federal Reserve is a private corporation which authorizes the US Treasury to print currency, which it then loans to the United States with interest. And this is what creates our national debt. Now, I don't know about you guys, but when I was in school, they told us we were in debt to China, and I really believed it. Well, in reality, the reason why our national debt is so high is because every Federal Reserve note becomes an obligation of the US government to pay back directly to these Federal Reserve bankers with interest. And Uncle Sam passes the bill to us. He maxed out his credit card and passes the bill to us. And paying off this national debt is the sole reason why we have an income tax. We're making the minimum interest payment on Uncle Sam's unlimited limit credit card. And the average taxpayer pays around $10,000 per year to the IRS. Why is that? Because they won't teach about it in school. Because if they told you in junior high, hey, when you grow up, turn 18, you're going to make the worst mistake of your life on April 15th, the school might lose their funding. Now, this is a real $10,000 Federal Reserve note, but I don't want you guys to pay attention to the amount on the bill. What's more important is something that most people often overlook, and it's a secret hidden in plain sight. It's right here in our face, guys. It's called 12 USC subsection 411. And all it says is that This note is legal tender for all debts, public and private. That part makes sense. But it's also redeemable in lawful money at the United States Treasury or any Federal Reserve Bank. Guys, when these Federal Reserve notes came out in 1913, the Treasury Department actually demanded that this statement, this law, be printed on every single bill. Why is that? What is 12 U.S.C. 411? Well, this one's kind of long, so we're just going to read the highlighted portion. It's the law that came out in regard to these Federal Reserve notes, and it's just describing them. We'll read the highlighted part. It's saying Federal Reserve notes shall be redeemed in lawful money on demand at the Treasury Department of the United States. Now, I know that might not be super straightforward. Why would they print a law on some money? What are they telling people to redeem a Federal Reserve note for? And why should they do it? Redeem it for what? Lawful money. For this. This is a United States note. This bill is non-taxable, and this is what you must redeem. Now, why is that? Well, according to our laws, 31 U.S. Code, subsection 5115B2, United States currency notes may not be held or used for reserve. They can't fractionate this currency. It's tied to gold. Now, do you notice something missing? There's no Federal Reserve seal on this bill. These United States notes, they're issued by the Treasury. They're not a Federal Reserve currency, and therefore they're not subject to the U.S. income tax associated with it. The only seal on this bill is the United States Treasury symbol. Once again, this bill is not subject to the U.S. income tax. Now, where did these United States notes come from? Why don't we see them anymore? Well, they came about during the Civil War as a result of the Legal Tender Act of 1862. The Treasury Department began issuing these non-taxable United States notes directly into circulation, and this was our default currency up until the creation of the Federal Reserve Bank. So the real question is, what happened? Well, you guys may already know, but by the order of former President Richard Nixon, lawful money was taken out of circulation in 1971. We were also taken off the gold standard. Now, ever since then, all currency printed are Federal Reserve notes. However, the law allowing the use of United States notes as legal tender still exists today. You still retain your right to redemption. 12 U.S.C. 411 is still in the books. This is still legal tender for all debts, public and private, and redeemable in lawful money. But take a look at our Federal Reserve notes. But I want you guys to pay a little bit more attention. Notice the two symbols on the currency. And I'm going to ask a question that most people probably never ask, but did you guys know you always had a choice on which one to use? Now, keep in mind, on the left-hand side, we have our Federal Reserve symbol, and we'll see what this one does. The use of this symbol goes through the Federal Reserve and creates a taxable event when receiving income. So guys, if you ever heard that thing where if you put more than 10,000 of these in your bank account, they're going to report you to the IRS. Why is that? It's because you're using their currency. Remember? The IRS is the debt collection arm of the Federal Reserve. Now, keep in mind, unless otherwise specified by you, any money you receive in your bank account, they're treated as Federal Reserve notes and it creates a taxable event. Remember that thing, Biden's hiring these IRS agents. If you put $600 in Cash App, you're using their currency. That's voluntary. Now, did you guys know you had a choice to actually bypass the Federal Reserve? And the way to do it was right in front of you the whole time. On the right-hand side, we have the United States Treasury symbol. Now, choosing to use the Treasury symbol, of course, bypasses the Federal Reserve and creates no taxable event when receiving income. And this, of course, is the process of redemption, creating lawful money, non-taxable currency. This is why the Treasury demanded that it be printed on every bill, because when you redeem lawful money, it contributes to lowering the national debt by the amount you've redeemed. Now, my whole point in saying this, I know it's been a mouthful, guys. I just want you to remember 12 U.S.C. 411. That's it. Whenever you receive a payment, I don't care if it's a direct deposit, it's a bank wire, an ACH, you have a choice to deposit either taxable Federal Reserve notes or non-taxable United States notes. Keep in mind, unless otherwise specified by you, the presumption is any money you receive in your bank account creates a taxable event. The real question is, how do we avoid this taxable event? It's simple. You have to make a choice. You must choose to redeem Federal Reserve notes for United States notes by using the green seal. This money is issued by the United States Congress and is directly authorized by the United States Constitution. It's also known as public credit. Keep in mind, United States notes are not subject to any form of taxable income event. This is what our founding fathers had in mind. Earning lawful money is your right. Earning a salary is your right. Making a living tax-free is your right. And it's right here in your face, as plain as day. So what does this have to do with taxes? You guys, probably know I let the cat out of the bag. Everything. Because you have the ability to legally claim all of your income as lawful money. And it doesn't matter how much or how little money you may have earned. Doing this will completely eliminate your tax liability. So how will we actually do this for you? It's pretty simple. We eliminate your tax liability with our 12411 process on your income tax return. So if you guys remember at the beginning, I told you I don't care about loopholes, workaround. I'm not looking to, be the needle in the haystack, looking for deductions and write-off and child tax credits. No, we're not big fans of that. Just bring all your earnings for the year. We will redeem every dime. And what is this going to do for you? Simply eliminate your tax liability, no matter how much or how little money you earned with the 12411 process. Your refund, when adjusted, should look something like this. For example, typical taxpayer, young, unmarried, Uncle Sam takes around $1,000 every pay period. At the end of the year, you've paid into the system 30 grand. You take all this time out of your personal time. On the weekend, you're sitting down gathering receipts, deductions, write-off. You're meeting with CPAs. You do all this work to get back $4,000 as a refund. You throw your hands up in the air and say, hallelujah, thank God, I didn't even owe. I love tax season. I got off so easy. The whole time the $30,000 was right there on the table in your face. You just never knew to plead 12 U.S.C. 411. But when you apply this process properly, it's going to grant you a full refund of any money withheld at the federal or state level, down to the dime. None of it is taxable. 100% of it was an overpayment. Can the process apply to you? That's a question that everyone usually asks me as soon as they get this information. So perfect question. Let's just get it out of the way. This 12411 process avoids taxable income events from occurring on the following. Let me know if this applies to you. W-2, 1099, rental, capital gains, crypto, lottery winnings, promissory note sales income. Think of it this way. Any form of income, as long as it has a dollar sign in front of it, whether it's earned or unearned, realized or unrealized, you still have the right to plead 12 U.S.C. 411. Now, does this process really work? Here are some of our client testimonies. Darnell K. in Texas. We filed our 2021 taxes in 2023. We had been doing the lawful money process on all our deposits since mid-2021. We received our 2021 income tax refund check back in less than 5 weeks after filing our 2021 lawful money tax return, all that we had paid in for that year. This just made a believer out of me on how real this is. Thank you, Wealth Guaranteed, for all your help. Darnell K. out of Texas. Now, here's another interesting one. Now, I want you guys to pay attention to the date on these checks. You notice something a little different? It's around 27 days ago, give or take. We're going to have one of our members, Mariah, actually, go ahead and speak a little bit about her experience, what it was like working through the 12411 process. We're going to go ahead and bring her on in a couple of minutes, actually. But wait, there's more. I know I just talked about the checks and stuff. That's nice and all. I don't want you guys to get tied up on the dollar amounts, the dates. Let's focus on the facts because there's something more important going on here. What's really more important is the fact that you made a voluntary election to become a taxpayer. People can fantasize about, oh, all the money I get back. The real question is, why do you volunteer to let them steal it? How long is this election you made to be treated as a taxpayer applied? Well, according to 26 U.S. Code, subsection 6013, paragraph G3, they hit it super deep in the Internal Revenue Code, but we found it. They call it duration of election. And we'll read it out. It says, an election under this subsection shall apply to the taxable year for which made, and to all subsequent taxable years until terminated under paragraph 4 or 5. And I mean, if you're someone who sees the glass as, half empty, you could say, oh, it lasts for all subsequent taxable years, but I see the glass as half full. Yes, it's going to stay in place for the rest of your days, but at least there's a way to terminate it. Why not discover how to terminate the election under paragraph 4? So let's take a look. Your legal means of terminating this election. Paragraph 4, termination of election. Your election shall terminate at the earliest of the following times. A, revocation by taxpayers. As you guys can see, this is by taxpayers, implying the ball is in your court. Need I say more? Of course, they don't want you to know about option A. They'd rather you go ahead and assume that all you have is option B, which of course is death. Now, needless to say, there's 2 ways out of this dirty game. You guys have seen what they don't want you to see, and now you know that you've always had a choice. You don't have to wait for death to escape the tax system. So what are we going to do for you? What will we do to terminate this election? It's simple. We will file on your behalf, only if you want it and only if you qualify, the ultimate solution, what we've developed here at Wealth Guaranteed, what we call the dissolution of default consent. And what is this going to do for you? Simple. Remove you from the taxation system forever. Our process is designed to change your legal status from a taxpayer back into a living, breathing man or woman. It's a multi-phase approach, but the last step is this. Once the IRS gets our instructions, your status will be changed from a taxpayer to a code 01, return not required to be mailed or filed, in the IRS individual master filer database. And when this happens, this is how to get onto the tax exemption list. Guys, I know how it sounds, tax exemption list. It sounds like it's this old piece of paper they just write people's names on, or they're gonna, give you some special status or recognition, like, hey, he's with Donald Trump and his friends. In real life, you guys know it doesn't work like that. The IRS, they're out here to make money. They're gonna keep it a lot more discreet. It's really just a database change. But when this change is made, it doesn't matter how many 1099s get reported against you. They could look up your individual master file and see status code 01. You're on the tax exemption list. You're no longer a taxpayer in their system. Now, how do we know this process works? It's because with every case we take on, we give the IRS fair ground to challenge. I'll be honest. We do. It's the law. We have to. But the IRS has never challenged our dissolution of default consent process. We are very proud to say that we maintain a 100% success rate with this process, and all of our clients exited the tax system simply, easily, and legally. And when everything's said and done, this is an acknowledgement you may receive from the agency. Everyone's acknowledgement is going to be custom created. It'll always be different, but some things will be consistent. They're going to say, dear taxpayer, thank you for your correspondence, which we received on a particular date. When they give you that date, they're playing a little game of cat and mouse. They know that you know what they got on October 13th. It was the last thing they wanted to see. They're going to say, we review the information you provided, determine no actions necessary on your account. There's nothing they can do with it but put you on the tax exemption list. We'll receive the revocation of election. That's what they're going to treat it as, established by the U.S. Congress, signed October 8th, 2021. Now, why they phrase it that way? Because Congress wrote the law allowing us to revoke the election to be treated as a taxpayer. But what they didn't do is create a standard template, form, process, or a tutorial on how to do so. At Wealth Guaranteed, that's exactly what we developed, the dissolution of default consent process. Now, of course, we want you to know that, being in the tax system is voluntary. We're not telling you to go ahead and ignore your responsibility. You have to know that you signed a contract. You have to abide by it or terminate it. Those are your options. We're not telling you to commit a crime. What we're telling you to do is be educated. We're telling you to know you have a choice. And if you need help, we can help you make one. Now, with that being said, I'd love to bring Mariah on board just to speak a little bit about her own experience with this process and how we help her make the same type of decision.